I think says starting recording, and then I think you mean it. Yep. Okay, we are recording.
Beautiful. Well, hello, everyone. It's Greg Iverson here at Neighborhood Loans, and I have the honor today to have Marck De Latour out of KC SBD Housing Solutions on with me today. And it's funny. I followed Mark for years, and to now have the opportunity to get to know him and really kind of look behind the curtain and see what it is that goes into his success, particularly in the turnkey market. So, Mark, welcome. Thanks for joining me.
Thanks, Greg. Yeah, happy to be with you, mate.
Yeah, so I'd like to kick off, if you don't mind, just a quick background on you and, where you come from, where you're at today. Obviously, there's probably a lot of iterations of that story, but what is it that brought you here to this point today?
Yeah, I was actually born and raised in New Zealand. So went through my high school education there and then came over to get my undergrad and then finally my MBA at UMKC. Here in Kansas City. So I've now 27 years living in the Kansas City marketplace. When I was getting my MBA, I flipped a house and kind of stumbled upon a pretty good return. And I thought, well, why do I want to go work at Cerner or Hallmark or Garmin or one of these big companies in Kansas City if I can just go make some decent money flipping houses? So my short story is I've never really had a job. I've always worked for myself. I'm the classic entrepreneur that says, why would I want to go work 40 hours for someone else when I can, pound away and work 80 or 90 hours a week for myself? So, that's my story. I started off just flipping a few houses. We've slowly grown over the years. And now we've flipped about 2,000 homes in the Kansas City marketplace. We've deployed around $80 million into multifamily syndications, apartment complexes around the country. And now we're developing and doing new construction that we're very proud of coming out of the ground here in Kansas City. And we have a team of about 30 people here in KC that help us do that.
That's interesting. That's something I really want to get to here in just a second. But safe to say, with your background, you discovered it yourself. And now, through the power of real estate investment, more getting that out to other folks and kind of teaching them the roadmap that you followed. Is that kind of your secret to success today?
Yeah, no doubt. I mean, this was always, I read Rich Dad, Poor Dad in 2001, and that was kind of the light bulb moment for me, just realizing that I didn't want to be putting all my eggs in the stock market. It just never, I always felt like if I wasn't on the inside, that I was definitely on the outside and I had no control. Real estate just spoke to me and I understand it. And so that's been my wealth accumulation. So from 2001 to today, I've just been picking up a few properties every year. So I have a very solid portfolio of around 70 homes in my personal portfolio, as well as about 1,000 doors on the multifamily side. And that's changed my life. COVID hit in 2020, and some people were freaking out and wondering if they would still have a job or income. But I had, a couple of businesses that were doing well, and I had a lot of cash positive passive income coming from rental properties through that time period. And that just gives you a different level of peace of mind when you have no debt and you have a bunch of passive income coming in. And that's kind of the purpose of this turnkey operation that we started for other people. And that's really how I turned around. As a full cycle real estate investor, I've been in multiple markets, the boom and bust of 01, and then the obviously the cratering out of in 2008. And what we pivoted in 2009 was banks, if you remember, were not lending to anybody. It was very difficult to get home loans and construction loans during that time period. But there were so many deals. I think one of the strange things about our mental psyche is when Walmart or Target have a 50% off sale, oh my gosh, everybody goes rushing to the doors. But when real estate has a sale, 50% off, everyone's like, oh my gosh, I would never buy real estate.
Get me out.
Yeah. So I just was smart enough to realize that there were enough people, if I knocked on enough doors, to say, hey, now would be the time. And so I started buying for other people using their cash. I did all the work, and we started just buying a bunch of inventory, and were able to capitalize on that time period, and found that what we were opening up for was, we realized that I think the real estate industry, quite frankly, has done a very poor job over the last 20 or 30 years of catering to investors that want to get involved in real estate, that want to ignore the stock market, or at least diversify. I'm not saying the stock market is all bad, but hey, take some eggs out of that big basket and put them into real estate and build a portfolio so that when inflation goes up, you can be riding that wave up and getting a ton of appreciation. And when you're making a lot of money, you can use the depreciation to offset your income. So there's just so many good reasons to buy passive turnkey real estate investments that it became a passion of mine. And that's why we're now trying to help people and educate people down the path to financial independence through the turnkey real estate operation.
You know, you said a couple of things that really stand out. And by the way, I was about 3 years behind you. I read Rich Dad Poor Dad in 2004. Literally changed my life, you know, and I think in what I gathered in your background, it's the ability to control your own destiny. And at the same time, you're not subject to potentially a rogue CEO or something like that. You know, you truly, obviously there's ups and downs, but you truly have the ability to control your time and your destiny, which I love. And you know, the other thing you pointed out, and I find myself telling clients this today quite often, but a gentleman, Warren Buffett, you know, says buy companies on the operating table, you know, and that's what I take away from what you said, and also my experience in 2008. You know, when it's not real popular today, when interest rates are a little bit higher, and a lot of people are talking about maybe real estate isn't the thing. It's staying that course and knowing why you initially got in when others are running for the door. And I'm convinced the ones that can stay the course and work that plan that they set out, regardless of the market, those are the ones long term that win, you know, regardless of what challenges come your way. So
yeah, there's no doubt that real estate is the turtle and not the hare, right? So you get, you know, this is not, you know, what we're preaching here. It's not a get rich quick scheme. This is not like, hey, buy real estate and you're going to be instantly wealthy. This is the, you know, they say, you know, delayed gratification is the sign of maturity. And I think never more so than with just rental real estate. You've got to have the diligence and patience to be buying now to enjoy the fruits of your labor 15 years later. But I can just tell you from a guy who's been buying now for, you know, the last, you know, 23 years, the fruits of the labor come a lot quicker than you think, because appreciation is a very real thing. You know, and paying off assets is important, but refi cash outs is a big deal, and can accelerate your portfolio growth or pay down some personal debt. You know, there's just so many benefits to buying and holding long-term, you know, quality assets.
And oftentimes those benefits are maybe not apparent to you when you buy that property, and then all of a sudden it shows up in the form of, you know, tax benefits or a great appreciating market, things like that. I love it, man. So talk to me. I know you're doing some build to rent, some new construction, and you know, admittedly, a lot of our clients and even myself are somewhat naive to that. It's been a lot of rehab to rent, you know, for the most part, which is obviously great as well. But if you don't mind, talk to me a little bit about that build to rent, that new construction, and kind of the benefits from your seat.
Yeah, so actually it was born out of necessity for us, because it was just really difficult to, you know, drive enough volume for this heightened demand that we had. We had so much capital, investors raising their hands saying, hey, I want to buy, I want to buy, I want to buy. And we just couldn't fulfill that need. You know, we comfortably can do somewhere around 100 to 150, you know, single family residential flips every year that put those into the pipeline. But we tried one year to get to 200, and that just stressed the organization in a very meaningful way. So we know, I'd love to say I'm smart enough to project all this out, Greg, but sometimes you just learn through doing things the wrong way. So now we've backed off and said, look, we need to find other ways to move that needle. And one of them was through multifamily syndications, buying some big apartment complexes. But that's not really, I mean, that's good for an investor just from a return perspective. But, you know, in 4 or 5 years' time, they've exited, they've been paid some capital, they have to pay capital gains on it, and then, you know, they move on to their next. So, you know, we're still a very big believers in assets that our investors own. Like we could borrow money from them, do private lending deals, or help them just do syndications all the time. But that's on the debt side of the equation. We need them on the equity side of the equation. We want their family to change that family tree. We want them to be getting passive income from assets that they actually own. So the way that we pivoted was to go to builders and partner with them, saying, hey, can you go build us some new construction? Now, we looked at several different models that way. And the first was obviously single family, right? Because that's who we are, single family people. But what we found was it's very difficult to make that pencil, because, you know, it's very hard to build a home under $350,000, and you can't charge enough in rent to make it, you know, you'd be selling it like a 3 or 4 cap. And sometimes I've seen, you know, properties down in Florida where it's you're negative cash flowing, and we just don't believe in the power of we believe in the power of real estate and don't believe you should have to buy negatively cash flowing assets in America. That's what they do in Australia and New Zealand. They just bet on the speculation and ramp up negatively cash flowing assets based on the appreciation, and that's just too much risk for what I want to encourage our investors to do. So we looked at multifamily. So then we started saying, okay, what about duplexes and fourplexes? And those you can cash flow positive and sell somewhere in a 6.5 cap range with cash on cash returns, depending on your floating interest rates at the time, but somewhere in that 8 to 12% cash on cash return. So now we're saying, okay, how many fourplexes can we build? We started going and looking for land that would be ideal, and we just did our first 13 fourplexes. So we've got more than 50 doors coming out of the ground just this year that we'll be selling off to our investor base. So we've got some really good fourplexes coming out that are renting out for around $1,350 to $1,450 per month for each of the 4 units. And then we've got duplexes, similar kind of thing, renting out for about $2,100 in a different part of town. So you're getting $4,200 for the duplex. And so those are, again, returning somewhere in the 6.5 cap range. So really strong returns on multifamily new construction. And we're super proud of that product because we know that the two big killers of cash flow are vacancy and maintenance. Yes. And we believe that on the new construction side of things, you're going to decrease both of those. Obviously, maintenance wise, you're just on a brand new construction, you're going to have the builder's warranty and very little maintenance moving forward. But we also think that the vacancy will be lesser when you have, such an ideal product that's just brand new and the people are moving in for the first time.
I love it. Yep. As a layman, I would have picked out the exact same things to ask you about, because that's, again, from my angle, those seem to be the strong benefits. And to what you said in the beginning, there's only so many homes out there you can rehab, so you have to get a little bit creative and, find other opportunities. So that's awesome. How about, in-house property management? I know obviously SBD, manages properties in-house. Why do that? I know there's a lot of headaches that come with it, obviously. But what is your overall reasoning in doing that to be able to offer, that turnkey solution to your clients?
Yeah, I appreciate you asking that question, Greg, because honestly, property management is a thankless task. You go on any large property management company's, Google page, and no one is a 5-star review, right? Because you're in that, you're always in that 3 to 4 range because the owners love you because you're holding tenants accountable, but the tenants are like, I left it perfect. And you're sending pictures of these, the stuff that's less than perfect, like kids are writing on the wall, we have to touch it up and that kind of thing. So,
yes,
it's a thankless task and very low margin business. However, I'm a firm believer that to be a true turnkey provider, you have to be doing property management yourself. You can't, otherwise you'd just be a house flipper. You'd just be selling assets to people all day long with very little accountability on the back end. And I mentioned earlier the two big killers of cash flow, which are vacancy and maintenance. I mean, if you could always have a property tenanted and you never had any maintenance, everybody would invest in real estate because there's zero risk. And the people that reduce your risk are your property management professionals. So literally, whether it's, SBD in Kansas City or any of these other companies around the country, if you're buying an asset from someone, make sure that they're managing it on the back end. I'd highly encourage your clientele to do some due diligence there, because if someone's just selling you an asset and then saying, oh, no, we have a preferred relationship with this vendor over here, we give them all of our business. Well, that may be fine, but then that property management company is just their sole source of revenue. They have 3 streams of revenue. It's property management fees, maintenance fees, and then other fees. And the property management fees are one thing, but we don't upcharge for maintenance at all. We want our investors to have the strongest cash flowing asset possible, meaning that we will do everything we can to decrease maintenance. Our screeners on the phones are trying to say no to people. That 2-letter N word that most, people can't really use. We use that word a lot, right? It's like, no, you don't need us to come over and change your light bulb. No, we don't need you to come check on that garbage disposal. Just unlock it from underneath. We're trying to decrease the maintenance for the assets in the long term so that our owners can just see that positive cash flow. And probably it's why we've got such a strong, like 98% owner retention and repeat business rate, is because, we really take care of our owners.
I love it. Yeah, it's not many can say that, Mark, as you know, and I think that's being an investor myself, having managed my own properties. What you just said, I couldn't agree with more. And at the end of the day, The game is to keep it occupied, little vacancy as possible by whatever means that takes, and then minimizing the maintenance that through both the rehab in the beginning or in the brand new construction, obviously minimizing it that way. But to your point also of keeping the tenant accountable, not just running out there to rack up a fee for your investor if it's not totally necessary, and
yeah, I mean,
it can be necessary, but
yeah,
not always.
At the end of the day, you've got to give your owner options, right? I mean, one of my owners said at one time, and I'll continue to use his analogy, but he said at the end of the day, a house is just like an apple. It is rotting from the outside in, and you've got to make sure that you protect the house with painting it every 10 years and making sure the roof's good and the gutters are good and make sure the water's draining away correctly. There is maintenance that needs to be done. And when you're investing in and scaling an operation that is a business in and of itself, you've got to make sure the people that are monitoring your assets are giving you options when they tour the property and inspect the property. They're large assets. And when you're doing it from afar, you have to trust that your property management team is keeping an eye on the assets for you, and that's what we do a pretty good job of.
Yeah, 100%, man. I love it. So, in conclusion, bring me up to speed on the KC market. Anything that investors out there should know that they don't already?
Yeah, I will give you a macro approach to the economy and then kind of bring it back down to Kansas City if you'll allow. We're mid-January 2023, and the market turned in about June last year in 2022 when the interest rates that were getting hiked up finally had a big impact. And people just kind of had to see where the interest rates were going to stop. People were talking about double digits. Maybe it's going to get to 10%. I mean, you were involved in that whole thing as well. You know how crazy it was. But I feel like now there's some semblance of calm that has been restored to the marketplace. And I think I'm bullish on the market in general in 2023. I understand that by technical definition, we're in a recession, and that real estate has certainly felt the effects of that. I think in markets that are like a roller coaster, the coast where it's a roller coaster. So California, New York, Florida, Vegas and Arizona for sure. Those areas certainly have certainly taken a big dip. Kansas City is pretty well insulated. Even in the markets of 2008 and 9, if you take away the foreclosure, lending crisis, that we were going through. I mean, we did see some houses that were discounted down by the banks just because they had to get rid of their assets. But as far as like retail sales, we took probably a 10, maybe 20% drop in some areas in the greatest real estate recession of our time. And so, I don't see us going much more than that. We have an operation that keeps a pretty good pulse on the retail market because although we, flip around 150 houses, only about 100 of those are turnkey, and the other 50 are in that kind of, $200,000 to $400,000 price range. So, we do flip houses just selling to the regular public. I think we currently have about 15 on the market. So we do keep a good pulse, and we're still seeing multiple offers, which would probably surprise some of your listeners.
Yes.
The good product out there that's beautifully remodeled, that is, in good condition and is move-in ready, is getting multiple offers and is still of high interest, and we're getting, our asking price. So we haven't seen a major correction. We've seen probably a 5%, 10% at most, in some of these areas, that were most affected, because I think in 2021, there was like this fervor in the market where, you'd put a house on the market for 310 and it would sell for 350. Well, it wasn't really worth 350. It was just people wanted to lock in their 3% money, knowing that the affordability right now was really, really strong. And the affordability now is obviously, gone up the other side. So there's that proportional decrease in sales price. But, from where I think we are, the market is stable. It's a great time to buy real estate, and the new construction stuff. The other benefit to our turnkey marketplace is that with interest rates kind of depressing retail home sales a little bit, it's certainly increased the rental market. So people are moving in. So with us filling up, 50 odd homes on this one street in Independence, as an example, we just got a report this morning that the leasing activity is really, really hot. And the new construction is something that people that are wanting to rent and commit to for, a 1 to 3 year time period, they're moving in, they're feeling good about the new construction. And so I'm pretty bullish on the Kansas City marketplace from a rental perspective. So if I'm a turnkey investor looking at a marketplace, I'd be looking somewhere in the Midwest that is, insulated from these major fluctuations from the coast, and just looking for a property management company that knows what the heck they're doing, because those are the ones that are going to protect your asset in the long term.
I would agree. And it's interesting being on the other side of the state here in St. Louis. What you said just resonates perfectly with what we see, with what we saw in '08, and what we're seeing now, and what I believe we'll continue to see here going forward. So one final curveball for you real quick. So safe to say, or I guess I should ask you, to the investor that calls you and says, I think I should wait. I'm going to wait and see, interest rates fall, so on and so forth. This is not you as Mark, the salesperson necessarily, but in your own personal experience, and obviously you've achieved a lot of success buying in, up and down markets, I would presume. What's your take on that? Buying today versus let's wait a couple of years and then give it a go.
Yeah, so forgetting my operation, not just putting like a financial advisor hat on, to advise a client in that situation. It's very, very personal, right? It depends on how much cash they have to burn. But most of our investor clients are, high income, high net worth individuals. And the question I would have would be simply, that's fine. What are you planning on doing with that capital? Because inflation is burning a hole in it pretty quickly. And so if they say, hey, I'm going to go take advantage of some stocks that I, see that are really undervalued, okay, great. I mean, that's fine. I just think idle cash right now, again, I'm a big believer in having a capital stack, in the bank that's just your forget about it money that you don't do anything with, right? So once you're fully deployed, you've got a capital stack sitting over here that's like your rainy day fund. You're never going to need it. It's 6 months of living expenses or a year or whatever you want to do that you're over here. Well, then you have a fiduciary responsibility to your family and your family trust to make sure that you invest wisely. And so if you want to go invest that capital somewhere else, that's fine. I would encourage you to just deploy capital, because there's no better way to hedge inflation than owning assets that are going to go up in value. So look, if it's a dentist that is thinking about buying his building that he's in, absolutely go buy that building. You might get a deal on it now, and hey, you pay yourself rent and deploy the capital into building it. And I just look for people that have that 20 to 50 year time horizon. One of the beauties of real estate investing is that you get to pass all of your assets to your children tax-free through step-up basis. So for those that don't understand that, you need to reach out to your accountant and ask them about step-up basis. But literally, when you pass away, all of your assets are going to get left to your heirs relatively tax-free. So unless they change the tax laws, currently it's tax-free up to $23 million. So unless people are in that north of 23 million in assets, that for most of us, that's our entire portfolio being left to our children tax-free. So think about how you can invest it. Think about what to do with it. I'm not saying that, single family turnkey is what you have to do, or one new construction building. But I also would dissuade someone if they're saying, why invest now? If they haven't started investing, they need to have a commitment. They need to get on the same page with their provider, knowing that it's something that they want to do. We spend all of our time, Greg, chasing tired landlords. The last thing I want to buy houses from them. The last thing that I want to do is to put one of my clients into that tired landlord position. And the way to get there is to buy 3 or 4 assets and then stop, because it'll be a pain in your side. If you don't have the commitment to go buy 10, 15, 20, 30 assets over the next 10 years. Again, we're not trying to, sell them to someone today, but have a commitment to growing a portfolio, then I don't want to be involved with that person, because they don't have the right mindset. This is just the turtle wins the race. It's not get rich quick. It's get wealthy slowly over time. Yes. And those are the type of people we would like to surround ourselves with.
Yeah, and I couldn't agree more. I don't think it's the more exciting it is, so to speak, oftentimes the less of a good investment, in my opinion.
Crypto, baby, let's go.
and I always tell our clients, it's not timing the market, it's time in the market, and taking those opportunities as they come your way. And really, time is what we have. The earlier you started when you were very young, obviously, I did the same thing. And, looking back, I bought my first handful of houses north of 8% interest rates. Now, that was great because I knew no different, but I can honestly tell you my only regret is I didn't buy more at those rates, and I physically didn't have the time to do it. But that truly, I think it's, like you said, looking at it over that long term, that long time horizon, and minimizing your tax liability along the way, and letting it really snowball and grow, and ideally leaving you something very valuable to leave legacy to your children and so on and so forth. So, man, we went longer than I expected, but I have to be honest, I got more than I bargained for. I again appreciate you coming on. I think our viewers will get a ton out of this. Final thing, what's the best way to reach you? Somebody's wanting to connect with you, your team.
Yeah, good question. So either reaching out on social, Instagram at Marck De Latour, Mistake Free Real Estate on YouTube, or just literally reach out to our team, invest at sbdhousing.com. But yeah, SBD Housing is our website, and happy to entertain and talk people through next steps. If they reach out, one of our investor liaisons will be able to take some next steps and just see if it would be right for them to begin this journey. But as you can see, I'm pretty passionate. I see what real estate has done, not just in my life and for my family, but also for our investors that are building and scaling and growing. And it's just, when you see this path, it takes time, right? But when you have clarity of what the end is in sight, I'm just passionate about leading people down that path.
I'm right there with you, man. Mark, thanks so much. I appreciate it.
Thanks so much for your time, Greg.
Of course. Take care.
Let me see if I can stop recording somehow.
That's all.
Stop recording. There we go.